Well, good morning, pro traders. Welcome to our Monday morning market review. Yeah, it's been an interesting August. I think August has certainly been living up to its traditional reputation of being a very slow month. Normally, it is a time when I would suspend trading altogether, but I know that some of you have been trading through it, so I decided to do it as well. Last week was not a successful week. It's been pretty solid up until now. It hasn't been anything spectacular, nothing to write home about, but we've had a pretty decent year to date. But August is definitely stacking up to be what it used to be, almost without exception, up until, I'd say, around the time of Grexit and then Brexit, which is quite some time ago now, about 10 years. But time does fly when you're having fun. In any case, I don't think we're going to spend a lot of time today on the charts because there just isn't that much to look at. But having said that, please do pop into the chat box if there's any particular chart you'd like me to look at in a bit more detail. So starting as always with Euro USD here on the weekly time frame, you'll notice that our support level has maintained itself intact with this bullish low test candle last week, which on the daily time frame simply looks like that. Some people ask me if they would trade that as an overlay. Well, it's not actually an overlay as such, even if you could use the overlay technique. It would in fact be just a range trade. But at the moment, we still don't have a setup for that because we need to have a breakdown in that bearish cyclicity before we could look at that. So nothing doing on most of these top pairs of ours. GBP USD also, okay, this is the daily chart, but well inside of that channel. And likewise on the weekly time frame, again, just a nothing burger for last week with that low test candle. But here on daily time frame, this being a phase one, if you're trading overlays, looking for the end of any phase one wave, then there is obviously, there was in fact an overlay last week on Friday, which went straight to take profits, as you can see over there. So for those of you who are starting to look at the overlays, here you can see that breakdown and sequentiality of cyclicity. Not so ideal with a very big extended candle, but the next one carried straight on and hit the take profit in that very next candle. For those of you who are still getting your heads around the impulse family of strategies, then please just focus on that and don't allow yourself to be distracted by these others. Dollar yen, likewise, here on weekly, very much inside of the channel, came up to test the resistance area during the course of last week, but then rolled over immediately later in the week, and it looks like that on the daily time frame. So again, very much inside of the channel. USD Swiss also here on weekly, it's pretty pathetic, really. The other thing to bear in mind, I know most of you have heard me talk about this periodically, is to keep an eye on the ATRs. And the lower the average true range for an instrument, and you can pick whatever measure you like. I just like looking at the 21-day ATRs, you know, and comparing that to its long-term average. The lower the average true range, the more difficult it is to make money, and that's just the way it is. And we are pretty much approaching our all-time lows, or certainly the lowest lows over the last 10 years or so is coming into view. Right, dollar Swiss. So we've looked at the weekly, daily, looks like that. If you'd also been looking to trade an overlay, there was a very short one there. And in hindsight, obviously, it went quite a lot further. But still, the overlay is pretty much what covered us last week, and that obviously is its job. It certainly did fulfill that role last week, where I think all of my H4 impulse trades ended up being stopped out either at break even or for a loss. And I've only got one daily impulse running, which is on Aussie Kiwi, and that's approaching take profit now. So that's at least something that's been going on, but that I think kicked off on the 2nd, so it's been a while. Right, so USD CAD on weekly, also nothing to look at. Very flat on all time frames really. And this is pretty much that's pretty much been a picture for us. Aussie, slightly different picture. Last week gave us an isolated high, or isolated the previous week's high, which of course means that in principle, this phase 2 wave is over using single time frame analysis. But as you know, we've been looking at this for a while and noting this very weak bullish cyclicity with these class 3 M patterns. We've had 2 class 3 M patterns in a row. And the second one, oops, hold on a sec, sorry about that. The second one is actually still alive. So these obviously being hybrids. The first hybrid we spoke about, I think, last week, got stopped out. But the second hybrid setup that we had, which was kicked off last week, Monday. I'm sure we would have discussed this in last week's Monday morning market review. It hasn't really gone anywhere, even though as of this morning now it's come back down into a small level of profit. But using the 2 5-step rule, our stop has been reduced by almost 50% of the original risk. So there's some potential for that. Of course, this bearish trend on weekly could just fizzle out and the market could just go completely flat for another couple of weeks, in which case the chances of this trade surviving the longer term are slim. But we followed our rules and we're still in that one. The Kiwi still doing nothing for us at all. And of course, now it's been quite a few months since we've actually looked to trade this pair at all, as you know. Moving on to our yen crosses. So euro yen, obviously inside the channel here on the weekly time frame, but we did have the market rollover as we discussed before. And if you had been looking to trade the end of that phase 2 and the start of the next phase 1, then this is pretty much what it would look like. Likewise, we did have that the breakdown in that bullish cyclicity in the phase 2 here on daily, or the trend which constitutes the phase 2 on the weekly time frame. And that's still going as well. And in fact, we should be able to trail the stop now with the 2 lower closes here to break even. So that one's still alive as well. But do remember that on the higher time frame, strictly speaking, we're inside that channel. GBP yen, likewise, inside the channel on weekly. There's been nothing really of interest here for us for quite some time. Swiss yen, likewise, no real change. Last week, we did have that high ringed by last week's bearish candle. But inside of the channel on both of those, this is a phase 1 wave. So if you're looking to trade the overlay, you'd be looking for this breakdown in cyclicity. And in fact, we may well be seeing that at the moment if you're trading the end of phase 1 waves. But again, nothing really to excite us for our core strategies, which is what we mostly depend on. Okay, this is obviously daily, but on weekly, I can actually update this analysis even further, just to point out. But on the weekly time frame, you start getting these very short waves, literally lasting 1 week. It's a sign that the market is very, very flat. There's no real directional bias. And I know that I'm preempting this because this week has still got a whole 5 days to go. But it's quite possible that we may end up having to do that later in the week. So, and of course, now we can update the bottom of our channel to where the ghost was. So absolutely flat, nothing for us to do here either. Aussie yen, so a similar picture. Now, remember that this analysis I did this analysis over the weekend, and although I recognized this was a bearish high test candle and potentially the end of this phase 2, now that this potentially will be ringed, obviously. So quite interested in that. Last week's high was the first time we were actually able to recognize this as a bullish phase 2. It's very flat, obviously, which we'll see on the daily time frame. But obviously, technically speaking, we're in a phase 2 of a trend here, which means that this will have potential for a bearish hybrid. We had the first one, similar to Aussie USD, obviously. That was stopped out on Wednesday, but then we had the next potential setup for a hybrid here, but we were not able to take this because this bullish wave had a higher close. So in actual fact, that's disqualified itself as a class 3 pattern, M pattern, which is a bit of a pity because now it seems like it is in fact rolling over. But it doesn't really matter that much because if we do get a class 1 M pattern in the follow-up here in later in the week or perhaps next week, we will have a second bite at the apple for those of you looking for hybrids. So Kiwi yen also very much something we've been staying away from. Moving on to our Euro crosses. Euro GBP, as we spoke about it last week, it came down to test the support level. It continued to do that through the course of last week, giving us that bullish low test candle. So we're still bouncing along on the bottom of this range on the support level. That bearish move did give us that breakout as we discussed in last week's market review. But it rolled over and came straight back up again. But at the moment, it is still generally respecting this resistance level. So remember this being a bearish trend now with that bearish breakout and being in a phase 2 here, you could be looking for a bearish hybrid. And in actual fact, you can see that I didn't do this on Friday, but if you had been trading this, you would have been looking to enter potentially at the open of the market this morning if you were going to do that. I don't trade in the early hours of a Monday morning, but we definitely now potentially do have this class 3 M pattern stacking up for us here. So that would obviously not have been a valid setup because this was a class 4 M pattern. We stay away from those, but we're looking like this may well be a class 3 M pattern. And in fact, in 48 minutes time, if it closes like this, this would certainly be a short for a hybrid. So I'm just putting in the indicative bars here just to show you what that potentially would look like. So keep an eye on that. Obviously, the hybrids being quite strongly convex, we don't expect nearly half of them to actually win, but they've really got a nice reward to risk ratio. Okay, so that's Euro GBP. Euro Swiss still in that phase 2, and last week certainly was a great example of why I don't like to trade this pair. It's just that the lower time frame price action is really quite choppy and gappy. So if you try to trade the overlay on this, and even down here as well, then it was quite difficult to be successful on that. Now, obviously this morning we're seeing this general euro weakness across the board and Swiss franc strength over here. So that certainly is coming back down again. There was no setup for a bearish overlay, and even as far as a hybrid is concerned, we prefer to trade all of these when they are outside of the channel, and this clearly pulls straight back inside of the channel. If you're just a channel trader, then certainly you could be looking already this morning for H4 impulse because this has got this closed outside of the channel. But if you are requiring that outside C close on your WM patterns, in other words, you want to have a class 1 M pattern, then that wouldn't qualify on that time frame. However, if you are otherwise happy to go for it, the big problem we have now is that we've got this very long extended candle. I really stay away from those as a rule. Even though we've got our ATR rule, the problem with these generally over the longer term, not every time obviously, but over the longer term, is that so much of the potential upside on the trade has already been soaked up by that move. In any case, Euro Swiss is something I'm quite happy to stay away from, as you guys know. Euro CAD, absolutely nothing here on weekly, which looks like that on daily. So yes, we did get that bearish breakout, but it pulled straight back inside of the channel once again. And look, we haven't had a close yet today, but there was potential for a valid class 1 M pattern here, if that's what you're trading. But with today's continued move inside of the previous wave's price territory, then that means it's, at best it'll be a class 2. So moving on to Euro Aussie. Nothing here on daily for us. It just bounced off of the support level of our channel, as you can see. But obviously we're in this trend on the weekly time frame. Phase 2 of the trend, obviously with last week giving us that low test, which ultimately is looking like it's going to be a ring. So we know that this is a phase 2 of a trend. That means that what we can now look for, obviously, is a bullish impulse candle. If you are trading the impulse strategies and you don't mind trading with a class 4 pattern, which is precisely what we've got over here, class 4W pattern, then this morning would have been an entry for you here on the daily impulse. So let's just check that. I'll draw it in for you. But you guys who are trading daily impulse with the channels, and obviously even with the WM pattern, this is certainly a valid class 1 W pattern in the making. So 187 being the ATR. That 187, so 104, that is inside of our ATR rule, so that's fine. And if you're using standard targeting, that's pretty close. Obviously taking spread and all of that into account. You know how the rules are. Looking pretty much like that with standard targeting. So the target just beyond that previous high. So there you go. That certainly would be a valid daily impulse if you are if you don't have that additional filter that I've discussed before, where you're requiring a class 1 or 2 W or M pattern on the execution type rate. Euro NZD again, Kiwi pairs not really exciting us, although we did get a breakout here on daily. Weekly still very, very much inside of that narrowing channel and tested the interim support level there. So this was obviously a breakout, but it came straight back inside of the channel on Thursday, closed inside. Cyclicity is not yet, or has not yet broken down on this. So technically we're still treating this as a bearish trend, but there's no valid trade for us at the moment, even on a hybrid, because unless you're trading weak trends on hybrids, which is something that can be done. And if you are, then you are looking for an M pattern. We actually did get an M pattern, but we just haven't had an impulse candle. So this is a valid class 3 M pattern, was already last week, but no impulse candle and therefore no trade. So that we may well be seeing another M pattern stacking up here now. And if we get a bearish impulse candle, that would be a hybrid, but just do bear in mind that then you are consciously trading a weak trend from inside of the channel on this pair. GBP Swiss, let's look at weekly first. Really nothing to interest us. Yeah, it's a class 3W pattern with last week's higher high, but so what? You know, we're not interested in that. It's looks like that on daily with the strong turnaround during the course of last week. Still deep inside of the channel. There's no valid WM patterns here. Quite long waves, it has to be said. And in hindsight, you might say, oh, how could I have actually traded that? Well, unfortunately, there's no rewind button for us. So we just follow the rules. The fact that we're inside of that channel, there's no WM patterns, there's nothing to trade. GBP CAD also very flat, as you can see, just a narrowing symmetrical triangle that seems to be forming there on the weekly time frame. And here on daily, also deep inside of the channel, so nothing for us to do. Let me just go back to that briefly. If you are and have been looking to trade the overlay on this, that's something that you could have been looking at. I see we did actually get one that got stopped out here. What's a bit disappointing, but obviously it was Friday as well, is we almost got another overlay set up here. And just so that for you guys who are learning how to trade the overlay, you'll notice that we had a bearish phase one wave here, which means that this, in terms of the W pattern up until that point in time, wasn't class 3, it was class 4, even when we ultimately then we did get this bullish impulse candle. So just didn't make the cut as far as our rules are concerned. And that's just the way it goes sometimes. GBP Aussie, so yep, this morning, quite a strong candle already, considering it's quite early still on Monday, which means that this low is likely now to be ringed, and that we'll be looking at the end of the day. I'll come back to that in a second, but I just want to point out, likewise with this one, we have been in potentially what is a phase 2 here, or if you're trading the daily impulse and consider inside candles to be continuations, then you would have been looking for this as a setup to go long on a daily impulse. And again, this one didn't work. So we got stopped out on this one on, that would have been Wednesday, but it's still a valid setup. So, you know, this potentially could be another signal for us to go long on daily impulse at the end of today. Well, certainly at the open of the market tomorrow. Looks like we might see some action creeping back into some of these markets, even though we're only halfway through August, right? So nothing for us to do there, of course. All these Kiwi pairs really just not at all interesting for us. Right, so moving on to the other crosses. CAD Swiss, we had another test of the support level through the course of last week. Bounced off of that again. I mean, we still got that lower low there, so that's now ringed with last week's candle coming up. So yeah, it's not really anything that we look to trade, obviously, but just to know where we are with this market. And again, another sort of long wave with impulse candle after impulse candle, which, considering we're inside of our channels here, is showing that we've got quite a lot of volatility in the market, but none of it's really that directional, because it can turn around very, very quickly. So that being a bullish phase one wave up until Thursday, or Friday actually, meant that it did qualify for us to look at as an overlay, and you can see that there was the overlay. Again, you know, these are the scenarios where you start wondering why maybe we should trade the overlay with deeper targets. So in cases like this, certainly it looks like we should. But most of the time, obviously, inside of a channel, we don't get this kind of price movement. In any case, it was one of the trades that helped to prevent last week from being worse than it was. Aussie Swiss in a phase 2 of a trend here on a weekly, obviously, certainly that high test candle last week. So if you're trading the hybrid approach, then you'd have been looking for a breakdown in that cyclicity on the daily time frame. Now we haven't actually got that. So although this, you know, we've got a bearish phase 1 here, this being a phase 2, it respected that resistance level. So, you know, now that we are, unless you'd already jumped into this at the open of the market this morning, I'd be looking for that phase 2 followed by a bearish impulse candle. If you're really on the ball this morning and looking to jump on board that, then obviously that too could have been taken as a hybrid. But certainly future potential there for daily impulse. Aussie CAD on weekly, outside of the channel, but just, you know, staying below this resistance level in a phase 2. So not really anything happening here. We had a couple, as we spoke about in previous sessions, a couple of setups which didn't go anywhere. So with this one, on that very flat price movement that we've got here on the weekly time frame, last week just being another inside bar, I've had other things to trade. So certainly when it comes to the Aussie, we've soaked up our maximum risk exposure on other instruments. Aussie Kiwi being one of them, we've been in a bearish daily impulse on this. I think it was a daily impulse, not a hybrid. since the 2nd of August. And I think that should be approaching, well, it was approaching take profit a little bit earlier. Let me just look here on my other chart. Yeah, so we're about less than 10 pips away, according to the platform, from hitting our take profit on that. And then likewise, yeah, I was looking for a potential hybrid on this as well, because we had this brief bullish cyclicity here on the daily time frame. And we got that bearish impulse candle there. So I've just got the, oh yes, I had it on the open, of course. That's actually spot on. I don't know why I moved that. All right, so bearish impulse candle, closed in the lower half of the candle, entered the market at the open on the following day. It didn't play ball immediately, but looks like, as I say, this is working quite nicely now. So if you were loading up, or if you had missed that previous trade, or if you wanted to get into a hybrid, that certainly was a setup to short the markets at open of the market on Thursday. And of course, it's gapped nicely over the weekend. So nicely into profit. So quite happy with that one. That literally is the only daily impulse I think I've got at the moment, even though I've shown you a couple of other setups. Right, Kiwi Swiss, again, nothing here. We've pulled back inside of the channel, obviously the week before already. So even though technically this is still a trend, it's weak. We are sitting inside of the channel. There's no valid potential M pattern here. At best, it's going to be a class 2, not a class 1. And it looks like that on daily. So yeah, we've just very much inside of this pretty wide channel that we've got. So I haven't been interested in trading that. If you were trading the end of the phase 1 on an overlay, then you could see where it ended up stacking up on Friday. And I think maybe even only would have hit take profits in the early hours of this morning. So yeah, nothing. These are quite tricky, because we had a whole sequence of lower highs here without us getting any opportunity to potentially short this, giving us an M pattern or a valid M pattern for the overlay. And it's gone quite a bit further, as you can see. So Kiwi CAD, first of all, on weekly, very flat, nothing interesting at all. Last week's candle just being an inside bar. And yeah, you can see here on daily as well, very much inside of the channel. So that's been pretty boring. If you're trading gold, we noticed last week, in fact, when we were having our Monday morning market review, that there was a bit of a crash happening, a flash crash, as they're known. So quite interesting that the bottom fell out of it with gold last week, Monday, carried on into Tuesday. It's pulled right back now. Quite interesting. We haven't seen something like that on gold for a while. So very much outside of the channel. If you're trading gold here and you want to look for a resumption of that bearish move, then keep an eye out on the H4 time frame for a hybrid. So very strong V pattern though, so those don't normally bode well. Looking at our indices, all-time highs being set every week, like almost like clockwork, certainly with these big stimulus packages, spending packages that they are passing in Congress. All of that total of $4.5 trillion is going to be going somewhere, and it's pushing the stock markets to all-time highs. So interesting that we have had a bit of a turnaround here into a phase 2 on the Dow, so bear that in mind. But if you have been trading this, then last week certainly you'd have been able to jump into a couple of lower time frame trades there, remembering that we prefer to trade our standard strategies only in a bullish direction on the indices. So nice and easy on the Dow. This is weekly, obviously, on the S&P 500. And again, likewise, you can see we've just had this continued bullish move with several impulse candles in a row. So all the way through to Friday. And NASDAQ. The one thing about NASDAQ, interestingly, is normally NASDAQ it almost moves ahead of the others because it attracts more risk-prone investors. That's not the case at the moment, very interestingly. So let's keep an eye on that. I'm not saying that this is a predictive uh, sign of any kind at all, but I am interested to note that the Nasdaq is lagging behind the others. And that's it, folks. So for those of you who are trading those instruments on your funded accounts as well, then you can have a look at those. But overall, I'd say that, much as there are these few opportunities that are potentially stacking up, particularly on the Aussie pairs, as we noted, which are still in trends on the weekly time frame, looks like we might be seeing the end of the phase twos on those weekly trends, and giving us some trading opportunities. But if this week is anything like last week, then you might well need to have some of those winning overlay trades to help cover the rest. Right, folks. So I don't see any questions in the chat box, and no requests for me to look at any other